Welcome back to another video. If you're stopping by the channel for the first time, please consider subscribing to my channel. And while you're at it, smash that thumbs up button for me. I really would appreciate it. Today we're going to be talking about how to make $1 million using two investment strategies that I've used in the past. Now the number we're going to talk about here today, the investment number, is $37,000 per year. For 15 years. The reason I'm using 15 years is I'm a firm believer in if you're going to build wealth, for the majority of us, we're going to have a long-term horizon. And for me, long-term is 15 years. Now, some of you may do it quicker than 15 years. Some of you may take longer than 15 years. But on average, 15 years, in my opinion, is the sweet spot when it comes to building wealth over time. Let's start with stocks. I love investing in the stock market. It has made me a lot of money. But for people who are not familiar with the stock market, I oftentimes recommend to people that they think about index funds. And the reason I like index funds is because you don't have to be a professional stock picker. The index fund itself is going to diversify and do all of the work for you. The particular type of index fund that I like investing in for long-term growth are index funds that track the S&P 500. So that's what I'm going to be talking about today. Now we would take our $37,000 per year for 15 years. Now that will give us a total investment in our index funds of $555,000. I've had an opportunity to look at some history on index funds that track the S&P 500. Typically, you're going to get about an 8 to 10% return on investment over the 20 years that I've been investing in index funds. So I'm going to go with the more conservative number, which is 8%. So if we take 8% return on average over 15 years on a $550,000 investment, we're going to earn, with compound interest, we're going to earn $445,000 in interest on our $555,000 investment. We add those two numbers together, guys, and you have $1 million. Now, I know it's not that easy. It does take dedication, commitment, consistency, discipline in order to do this. I get it. It's not easy. But if you're willing to put in that work, you can make $1 million. Now, once you make the $1 million, you can easily monetize that $1 million in stock portfolio and turn it into $70,000 a year in passive income. Now, how I determined that was, again, I take a conservative 7% rate of return on your $1 million, and you'll have a gross $70K in passive income. Based on what your income tax bracket is, you'll have to pay some tax on that, and you may not have to pay tax. But that's something you can talk with your CPA about. That's right, guys. You can make $1 million in the stock market investing in index funds if you're willing to be disciplined, committed, and consistent. Now let's move on to number 2, which is real estate. Another investment vehicle that I've used in the past and have done extremely well with it. In real estate, I like single family homes. And this scenario that I'm going to walk you through today deals with single family homes. Now, we would take that same $37,000 over the next 15 years and we would invest it in real estate. But in the first 5 years, we would concentrate that $37,000 a year to buying 5 single family homes, which is right here. So we would take a $200,000 house and we would buy 5 of them with our $37,000 per year. Now, the reason I used $200,000, guys, is because in the area where I live at in Southwest Florida, this scenario makes sense. In your part of the country, the barrier to entry to get into single family homes might be higher. So the numbers would change for you. But where I live, I can buy a $200,000 house and I can put 20% down, which is 40 grand or roughly your 37K that you would be investing, and be able to get into that single family home. So in 5 years, I would buy 5 200K single family homes, which total about $1 million in value, right? And then what I would do is I would take those 5 single family homes and I would put tenants in them. Again, I'm using rental rates in the market where I live. They may be different in the market where you live. But I could take this $200,000 house and I could rent it out for between $1,200 and $1,500. Again, I'm gonna stay on the conservative side. Let's say I can only rent the place for $1,200 a month. I have 5 of these properties. So I would rent each one of them for $14,400 for the year. That's $1,200 a month times 12. And I times that $14,400 by 5. That'll give me roughly $72,000 a year in rental income. Now on that gross rental income, I'm gonna have some expenses. So I'll have about 30% in expenses on that $72,000 in gross rental income, which represent about $21,000. Keep in mind, I'm also gonna have mortgage expense because remember, I purchased $1 million worth of properties. I have to put my 20% in, which represents $200,000, but then I gotta go out and get $800,000 in loans from a bank. And in order to borrow $800,000 on a 30-year mortgage at around a 4% interest rate, it's gonna cost me about $45,000 a year in principal and interest payments. So I got $72,000 in gross rental income coming in. I got $21,000, which is about 30% of my gross income, that's gonna go towards expenses like property taxes, insurance, and general maintenance and repair items. And then another $45K is gonna go towards the mortgage payment on the $800,000 in bank loans for the mortgage. So in that scenario right there, I would take the $37,000 for the first 5 years. I would invest it in 5 properties, so 1 property a year at 20% on a $200,000 property. That would leave me with a $160,000 mortgage for each property, which totals $800,000. For the last 10 years of that 15-year investment cycle, I'm gonna take that $37,000 and I'm gonna make extra payments on my $800,000 mortgage. So I'm gonna make 37 payments for the next 10 years, which totals $370,000. I'm gonna make those extra payments on my $800,000 mortgage. And by making those extra payments along with my normal principal and interest payments, in 14 years, the $800,000 loan will be paid off in full. So I took $37,000, I purchased 5 properties in the first 5 years, and then I took my last 10 years, I took my $37,000 investment every year, and I put it towards principal pay down of my $800,000 loan. And by doing that, in 14 years, I paid my loan off in full. Now, after that 14 years, I get $72,000 in rental income when I initially started. But again, over 15 years, over 14 years, rental income is gonna go up. So my rental income per property started at $1,200 15 years ago. Now it's gonna go up to about $1,700 per month. And when I do $1,700 per month times 5 times 12, I will have gross rents in 14 years of $102,000. 30% will go again towards expenses like property taxes, insurance, and general repair and maintenance work. That's going to come to about $32,000. But then it's going to leave me an annual payment of $70,000 that would come to me. Remember, the mortgages are paid off. So after I pay my expenses, the remainder of my rental income would come to me in the form of $70,000 per year. So there you go, guys. You have two investment strategies that you can make $1 million in 15 years. Again, this is very conservative for the $1 million because remember, you paid $1 million 15 years ago, right? It would be obvious over the next 15 years, some of these properties will appreciate in value. So really your $1 million investment, really you invested $200,000 of your own money, but the value of your real estate when you originally purchased it 15 years ago for the first 5 years of taking that $37,000 and buying a property each year came to $1 million. But over time, that value is going to go up over the next 15 years. So this could be very well in that $1.3 to $1.4 million range with capital appreciation. All right. But nevertheless, both investment strategies will make you $1 million in 15 years, and both investment strategies will provide you with passive income of $70,000 per year, which, guys, again, for the average person just like me, I'm okay with that deal. Now, the question will come up, well, where do you get the $37K from? Well, here's the deal, guys. If you're going to build wealth, it's going to take money. You need to go out and figure out a way to create money or more money. If your current income that you're making right now at your business, at your job, at your side hustle is not enough, your job is to figure out a way to make more money. It takes money to make money. I'm not going to sit here on this video and tell you it doesn't, because it does. Over the last 20 years, I had to figure out a way to create more money. And I did that through improving my skill set on my 9-to-5 job and increasing my salary over the years. And I also developed additional streams of income that allowed me to make more money so I could invest more into the stock market through index funds and into real estate investing through single-family homes. By doing that, I put myself in a position to have a 7-figure net worth, passive income coming in, and I'm able to do what I love to do, which is make videos for you guys. Thank you for stopping by the channel. I hope this exercise was helpful. Drop me some comments. Let me know what you think. Thoughts become things. If you can see it in your mind, you can hold it in your hands. You guys keep chasing your greatness. Never stop believing in yourself. And I will catch you guys on the next video. Peace. Webull is going to give you 2 free stocks when you open a new Webull brokerage account. Deposit at least $100 in that brokerage account. You're going to get 2 free stocks valued up to $2,300. Guys, that's free money. So at the end of this video, I want you to click on the link in the video description box and sign up for Webull and get those 2 free stocks today. Today's video is sponsored by my company, RF Financial Consulting. And in my company, I work with individuals just like you through financial mentoring and coaching sessions. And in those 1-hour sessions, we talk about strategies to help you get to your financial freedom, whether it be through real estate investing, stock market investing, creating additional streams of income, credit card arbitrage, or starting and growing a business. If that's something that you might be interested in, there's an email address in the description box of the video. Send me an email and let's discuss if I'm the right fit for you.